All right, here we are, Easy Insights Financial Reports. This module is really going to be good for you. It is the essence of the just right porridge in the Three Bears fable. Not too much data, but a lot of context. So it's just right for you to get a handle on what in the heck is going on in your business, where is your money going, and how to get more of it back, how to plug those leaks, how to optimize profitability, how to turn profit into cash, cash into wealth. Bingo, let's go forward. So excited for the new folks into the program, as well as the folks who rolled over from Profit Accelerator. The Profit Accelerator folks, remember, mindset, mindset, mindset. Mindset is everything, just like Vince Lombardi. Mindset isn't the only thing, it's everything, or something like that. Anyway, this whole thing with the Profit CFO and financials and accounting reports and that whole deal, it's all about serving you as the business owner to make better decisions to manage the company. So make those reports serve you. There's sort of an illusion that you have to follow generally acceptable accounting principles and all that in these reports. Like, yeah, you do have to follow some GAAP requirements if you're a big public company or when it comes to filing taxes and stuff like that. But the reports that you use to manage your business, they don't need to follow anything other than what helps you win. And to win, you need to manage your own numbers. Number one, you need to be good at the numbers. And number two, you need to be on top of those numbers. Once the business gets bigger, then you can just keep track of by looking around. You need those numbers because that is the way that you multiply yourself, you roll things up, you get economies of scale, you get the ability to manage and be effective at scale. So you guys are numbers people. Many of you are in this class under the mistaken illusion that, hey, I'm not a numbers person, so I need this to help me. Well, number one, we will help you, quote, become more of a numbers person. And number two, that idea, that mental construct that you're not a numbers person is just grade A dog shit, and let's throw it out. In fact, please make a list of 50 examples between now and next Monday of you being a numbers person. Let me give you some examples. If you know the annual salaries or hourly wages of people on your staff, write those down. That's because you're a numbers person. If you know how much you sell stuff for, like your price list, it's because you're a numbers person. If you know how much you sold to specific customers this month, this year, last order, whatever, write some of those examples down because those are examples of you being a numbers person. If you know when you're making money and when you're losing money, that's because you're a numbers person. This idea that you're not a numbers person is like 99% of the time total horseshit when it comes to successful CEOs, and we have to break that head trash, release you from that trash. Okay, you got to make the numbers work for you. So let's rearrange how we do things so that it works for you. That is what the little bowl of porridge that's just right is all about. That's what the Profit CFO is going to help you with. Okay, don't delegate the CEO stuff. That's your job, man. So own it. Don't hide from finance and accounting. We're going to show you how to make the most important stuff real easy so you can crush it. Let's move forward. All right, you came to the right place. Let's talk about the Easy Insights principles. Number one, make it easy to see important stuff. Very, very common. There's just too much on a sheet of paper to figure out what the F is going on. And it's not on there in a very effective way. So number two, hide the noise, hide the important stuff by basically stripping away the stuff that's not helpful. What's left is easier to understand, easier to comprehend, easier to see, to spot, and to draw insights from. Remember here that utility is more important than precision, and it's more important than accuracy. Now I want to call a big time out for team accounting and bookkeeping. This doesn't mean stuff doesn't need to be, quote, right. in QuickBooks. I'm not saying that. What I am saying is when it comes to a management report, a report that helps managers manage is more important than 2 decimal places. It's more important than every number having to do with the topic being on the sheet of paper. It's better to know roughly my per unit labor cost is $37 than it is to know exactly a bunch of little extraneous details that get in the way of understanding whether or not I need to raise or lower my prices, or whether or not I should start or stop selling something. Okay, remember, business first, accounting second. I get it, there's a time when maybe accounting goes first, like filing your taxes, but we're not talking about filing your taxes here. We're talking about how to run your company using the numbers so you maximize your profitability, turn profitability into cash, and cash into personal wealth. And that's not an accounting exercise. That's a business exercise. You need to know your key numbers and how they relate. It's not about memorizing every number on the page. It's like, what are the 5 things that really drive your business? And we're going to help you identify them, see how they work together, and really wrap your mind around it. Okay, helping managers manage. That's the point. I think I already said that. Let's move on. All right, now we're really getting into it. First off, with EZInsights financial reports, hide the distractions to show the insights. Remember, get rid of the noise so what you see is the more important stuff. So the most obvious thing is to hide unimportant numbers. And generally, what is defined as an unimportant number? A small one. If you're a $5 million company and you're looking at your annual P&L, so this is what your revenue was, 5 million, and all the expenses and costs and whatever, and then your net profitability and all that kind of stuff, right? A number on there for the year that adds up to $1,000 or even $5,000, that's noise when it comes to trying to understand in broad strokes how the company is doing, where you're going, and where most likely you should be optimizing. Now, don't get me wrong. If you're doing a monthly or quarterly expense scrub and you want to see every expense and try to tune, hey, $5,000 numbers are a great place to get in, roll up your sleeves on. But that's not the same as a monthly, quarterly, or annual business review looking at your financials. In that case, 5 million, 1% of that is 50,000, 0.5% of that is 25,000. Pretty much any row that sums up to less than 0.5% of the top line revenue of that period is generally speaking going to be noise and should be either hidden or grouped with other similar things to then roll up to a bigger number that is, at least in this case, 25,000 or 0.5% of revenue. Another one, super simple, just get rid of the zeros, those pennies. Pennies are not interesting in what we're doing here. So if you've got a $5 million company and 1% is 50,000 and 0.5% is 25,000, what are we doing taking up 3 places in every number, the period and 2 decimals? It just doesn't make any sense. Get rid of it. For many of you, getting rid of what's called thousands, like if you ever look at a big financial report for like a Wall Street company, a lot of times they even take off the millions, so their numbers are stated in millions. But for you, you could state in thousands, totally be reasonable for almost everybody in this group. So yeah, the metaphor, by the way, with the trees there is, if there's too much trees or too much forest or whatever, forest for the trees, you can't see the important stuff for all the noise. All right, imagine you've got a giant, big, dirty boulder and you crack that thing open and you see this. You're like, hey, we need to split the big rows to understand what is inside there, what the insights are. Really good examples are to split revenue, labor, and materials, because anything that is bigger than about 5 or 10% of revenue is a good candidate to be split. Sometimes it doesn't make sense, but I really want you to think anything bigger than 5 or 10% Should we try to split it open like that geode over there to reveal what's inside? The last thing you would want is to see, let's say, a third of your revenue shrinking over the last 3 years, while another third is growing to make up for that. Revenue is flat. You think nothing's going on, but underneath that big flat number, a lot is going on. So that's how important it is to split those big rows. Remember, on the last slide or so, we were combining the small ones, just as important to split open the big ones. Okay, group things together. So for example, let's say sales labor cost. I am not that interested in splitting up sales labor from sales FICA and Social Security and this and state unemployment and blah, blah, blah. I'd like to see one number maybe for sales labor, or maybe one number for sales base cost and one number for sales commission or something along those lines. But I also don't want to see my sales labor jammed in with my marketing folks and my back-end admin team and my service delivery and whatever. So really good to split those labor categories by the different functional areas. I want to know how many dollars I'm spending each year on my marketing team, my sales team, my offshore team, or different flavors of my offshore team, etc. But then again, I also don't want those other ancillary costs, healthcare, 401k, blah, 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 for like my admin and finance team, all somewhere else. I want it with what I think of it's costing me for my admin and finance team, or whatever you just call it there. Okay, so we can reorder the rows so it makes more sense. That's exactly what I was talking about. Grouping things together. Sometimes they're in different parts of the P&L. A lot of those labor taxes and 401k and stuff are often not sitting right next to the actual labor or wage line. Okay, gross margin, contribution margin, fixed and variable costs. That's another element that we'll be getting into in weeks to come, but we want your P&L to show you what's important. Split the big rows to reveal the insights, combine the small numbers so you don't have to get distracted by the noise. Reorder the rows so it makes more logical sense and the right numbers are with the other right numbers so you can combine them and see like one thing instead of 4 little scraps that are confusing. Okay, let's jump ahead. All right, here's a fun one. Look at the jar and tell me how much tea is in there. But you know, we want you to be accurate within like 4%. Maybe not that easy, huh? Now, it might be easy to tell this one's almost at 100%, maybe. But how about this one right here? How about that one right there? Can you tell me how full that jar is within a couple of percentage points? Not very easy, right? Now, try this one on for size. Oh, now the builds are working. Okay, well, should be pretty easy to see that this one is right at 4 cups. And if we were going to call this an 8-cup measure, it's half full. Or we could argue that it holds 10 cups, it just doesn't grade that high or whatever. But anyway, here's my point. When you put the measuring right on the jar or the cup or whatever, it gets really easy to estimate how much is in there. Why don't we apply the same thing to your financials? Ding, ding, we do. Let's jump ahead. Adding context within your financials is a super pro move to make it really easy. Because sometimes when we have multiple time periods, which you should always have, because just one row of numbers puts all the work on you to add the context. So once we put several different time periods next to each other, you get to see the trends. You don't have to remember if 2 years ago you spent $15,000 or $55,000 on professional services, because it's showing right there. And based on that, you could tell that this year's number of 55,000 maybe is good or maybe isn't good. But without having that other context of maybe the year before and the year before that, it's kind of just a number hanging out there unless you're really, really good at memorizing all those figures. Why make it so hard on yourself? So, multiple time periods, critical, pretty much a rule, do it all the time. Number 2, percent of sales. That is an even more pro way. like that measuring cup with the gradations or the measuring marks on it. Because then, when last year professional services was $35,000 on 7.5 million, you could get a sense of, now that we have $53,000 of professional services, but it's on 9.1 million of revenue, well, are we doing better or worse on our expenditures on professional services? That starts to become, I wouldn't call it fancy math, but why make it hard on yourself? Computers are spitting out all these dang reports. Let them do the calculations for you. So this percent of sales or percent of revenue is referred to as common size or common sizing of financial statements. Super, super helpful. All the big boys do it in their Wall Street reporting. Why not you do it too? Make it easy on yourself. These things are very similar to using things like actual, budget, and variance in giving you basically the context right there. So you don't have to remember or guess or estimate if a number is like good or bad. It's pretty much staring you right in the face. Okay, let's jump forward. All right, here's a quick checklist to go through these things and summarize it all. So number one, just remember, make the computers work for us. Have them produce reports so the insights just pop off the page instead of being buried deep down in the weeds. It doesn't make any sense. So section one, hide the unimportant numbers. So either just hide them or group them, but in general, things that are less than 0.5% don't belong on a management review of your P&L unless you're doing some kind of a drill down. We want to see maybe 10 to 20 lines on your P&L, unless you've got multiple locations or a whole bunch of different kind of product areas or whatever. But generally speaking, 1 or 2 pages of a P&L should be plenty. And those 1 or 2 pages, going down to number 3, should absolutely include multiple periods. If it's years, probably 3 to 5. If it's quarters, how about like 6 or 8? If it's months, why not 12? And I really like adding percent of sales to your P&L. Now, by the way, those multiple time periods, just as critical for the statement of cash flow. And for those multiple time periods, just as critical for the cash flow statement and the balance sheet. Very, very, very helpful. Okay, reveal important numbers. Split the big numbers. Anything bigger than 5 or 10% of sales, absolutely a good candidate for splitting into smaller parts. Remember, revenue, labor, materials, really good areas to break up into some smaller chunks. Okay, group like things together. Payroll is such a good one. On so many people's P&L, every category of labor also includes another 5 to 8 other line items scattered around the P&L associated with that labor cost. I don't know, mush them together. Okay, great. Reorder the costs so it makes logical sense. I've seen some where the line items or the GL codes or the chart of accounts are alphabetical. Well, that's madness. It completely doesn't help. It's actually splitting things that normally would go together into not going together. It's totally unhelpful. So hide the unimportant numbers by hiding, grouping, etc. Get rid of those like cents and decimal places and whatnot. Reveal the important information by breaking stuff up. Reorder things so they go together and make it easy. Add context, multiple time periods, and percent of sales to common size your P&L. All right, let's jump ahead. All right, you've heard that a picture is worth 1,000 words. Well, let me tell you, I've got a 9-minute video of me walking through an example P&L and applying these tools, and it's worth way more than like 9,000 words. So definitely watch those 9 minutes. What I would say is we'll probably be having a 1-page checklist of that slide that I just covered with the checklist on it, or just take a picture or whatever, but go through that 9-minute video with that checklist and watch it play out, and then take that checklist and go to your own dang P&L and be like, wow, this is a lot better. And if you're not finding it better, I'm guessing either you need to come to office hours and ask me some questions, Or maybe you're already a superstar and really good managerial and financial reports is one of your strong suits. So this is going to be a real easy module for you. For many people, this is really, really helpful. And I got to tell you, for those folks who walked in the door saying we're not numbers people or a little bit intimidated by their financials, this simplification process, getting your P&L down to like 1 or 2 pages with the built-in context and getting rid of the noise, it is going to be a game changer. Makes it so dang easy. I mean, basically every month you really only need to be looking at 5 or 10 numbers. So why do you need 1,000 numbers on the page? You don't. All right. Can't wait till next week and looking forward to seeing many of you at office hours. Be well.